Hong Kong Stock Exchange making a $37 billion bid today for the London Stock Exchange. Hong Kong execs say the deal would be a means of connecting trade between the East and the West. Joining us to weigh in is someone who knows a great deal about exchanges because he runs one. Let's bring in Terry Duffy, Chairman and CEO of the CME Group. Terry, it's great to have you here on set. Welcome to Fast Money.
Well, thank you, Melissa. I appreciate it. I'm a big fan of your show and all your hosts here, so thank you very much for having me.
Thank you for being a loyal viewer. What do you make of this deal? And is CME Group tempted to enter the waters?
Well, first of all, it's a very full price, as we say in the business. You got to realize that the price that the Hong Kong Exchange came out with is 22% on top of when the Refinitiv deal was announced, so that would make it technically a 42% premium to LSE's original price when they came out on Refinitiv. So a very, very rich offer by Hong Kong on this transaction. You know, for CME, I've been very fortunate to put many pieces of the puzzle in place, which others are now trying to compete with on that playing field. So when I did the Board of Trade in 2007, New York Mercantile Exchange in 2008, you know, I'm very focused on that growth of the business, and then obviously just completing the next transaction, NEX Exchange out of London in November. We're integrating that. So as I tell people, I'm focused on integrating that business and growing ours. So, you know, from CME's perspective, we're very pleased with what we have in place today.
So correct me if I'm wrong, but it sounds like you're saying that you would not make any sort of competing offer for LSE. You wouldn't get involved.
We don't comment on that, Melissa, to be honest with you. I will just tell you how I feel about the business. Mm-hmm. I buy things that are very compelling for my clients that are users of the marketplace. And that's why the NEX transaction was very compelling for my users, because you're going to have, for the first time, cash treasuries alongside the largest futures exchange treasury platform in the world, largest EBS alongside of CME's FX platform. You don't ever see that in any other exchange. So that to me is compelling. I would ask you what would be compelling about LSE. When you look at what they have today, they have the LCH, the London Clearinghouse, which I would assume regulators would have a big issue with me as the largest clearinghouse in the world trying to acquire that. And then when you look at the other businesses they have the Frank Russell business, which is a very good business, but I just signed a 10-year deal with them to exclusively trade that product. So what else is left? You'd have to say the cash exchange business. And as you know, we are very much not involved in the cash trading of these products. So you never say never to anything, but I think I clearly outlined where our business plan is.
In terms of the blueprint for what a CME acquisition could be, how should we think about that? What areas, are there geographies or technologies that we should be thinking about?
I think when you got to look at your client, how can you make your client more efficient going forward? And if you can make your client more efficient, you should make that acquisition, because that's what will pay your shareholders. I'm very focused. I tell my shareholders all the time, the last person you want to see is me. You want me with my clients, and that's what I do. I'm very focused on working with the clients, checking their needs. I traded for 23 years in the marketplace. I have a good understanding of the market, so I know what clients I believe need, and I want to make sure I can help provide that to them where others can't. So that's where I believe the scale works, and you have to look around the different spectrums and technology and others to make the efficiency of the marketplace.
Terry, going to CME specifically, you're coming off the best August ever. I think average daily volume, I think you're up 53% or some ridiculous number year over year. Understanding that this August was different than last August, what do you attribute that growth to, and can that sustain itself?
Well, here, guys, it's hard to predict what future volumes are, but it's not only the biggest August we've had, it's the second biggest month in the history of CME. So August, as we know, is traditionally a slower month because Europe goes to sleep. Those days are long gone. So I think what you can attribute it to is when you look at, we've been talking a lot about rates. You guys talk about rates all the time. People are trying to understand what the rate market means. And just because rates are coming next to zero, it does not mean you will not have interest rate exposure. You could take rates negative, and as long as they move in the negative, you're going to have rate exposure of some time, because there'll be different prices for different people on different things. Unless credit cards went negative, and I don't believe that's the case, mortgages in Denmark have gone negative for one person. I think there's still a lot of rate exposure out there, and we saw a lot of positioning in our marketplace to do that. So you get the efficiencies of the swaps, the dollar-denominated swaps coming into our interest rate portfolio. You create an extra $3 billion of margin efficiencies for our clients. Very attractive proposal, and you saw a lot of that movement coming in through the month of August.
Would you say that the month of August being such a stellar month was because of the rate volatility, and if that dies down, then do you not repeat that?
No, well, I think it's hard to say because we trade multiple asset classes, Melissa, and I think that's the beauty of CME's model. You know, people talk a lot about the VIX. I heard my friend Karen talking earlier about how she wants to have exposure to the VIX a little bit for volatility reasons. But what the VIX that you all talk about is basically the equity volatility that you're referring to. The VIX in of itself, you look at volatility in all these other asset classes, whether they're foreign exchange, whether they're energy, we trade all these products. So that's what's attractive about CME. You have to understand volatility today is measured completely different than when I first grew up in the business, knowing my friend Guy Adami over here. The tolerance for volatility is completely different. So when you have movements like you have in the marketplaces today, people kind of dismiss them. They won't dismiss them in certain things, but right now they're dismissing these volatilities, and so I think they're pricing vol a little bit different than they historically did. And they're pricing it on equities only. They're not taking the rest of the spectrum into consideration.
Speaking of vol, you must have heard of JP Morgan's Vol-Fefe index.
JP Morgan's
Vol-Fefe index.
I have not heard of that.
Oh, which basically it tracks Trump's tweets and the volatility.
I'm sorry, I did hear that. Yes.
Yeah. Could there be a product tied to that in some time?
Not at CME.
Okay. Just had to
ask. No.
Terry, it's great to see you.
Thank you very much for having me. I appreciate it.
Come back anytime.
Thank you.
Terry Duffy. CME Group CEO.
He makes a fascinating point because, we focus most of the show on equities.
Yes.
But when you think about the volatility in all these other asset classes and where the futures on those asset classes are trading, and that's one of the reasons why this stock has been a rocket ship for like 3 straight years now. And what have we seen in 16 and 17? We've seen fixed income volatility, currency volatility, commodity volatility. Every once in a while, the VIX gets above 20, but we spend a lot of time talking about that.
What I hate, or as a long investor, it's delightful for you, right? Mm-hmm. Yeah. So we'd be decently hedged, I guess. But it's been an amazing story. Sold off the last couple, 2-3 sessions, but what a great run! Excellent job.
Yeah.
Yeah.
Simply, derivative on the derivative markets that they trade. These guys, there's a battleground over data within the exchange community, too. And this is an incredibly valuable asset that I think is becoming some way people look at the valuations of these companies.
Yeah. It's amazing how often we'll get an email from Terry mid-show.
It's incredible.
About something
and I say all the time,
that we've said.
Be shocked at who watches the show.
Well, I've never gotten one, so Guy, you seem to get all of them.
Full disclosure, I've known Terry for a long time. We were in the same world for a lot of years,
right.
And that doesn't mean he's not one of the great CEOs in the United States, and that doesn't mean the stock still can't go higher. Just because I like him doesn't mean I'm clouded.
Just because he likes you mean.
We like There's a mutual love fist. The knock quickly on CME, valuation 28 times. People say it's expensive. Yes, it's sold off, I think, 8% over the last couple trading sessions. I think you got to buy the stock again.